Scott, thanks for being here today. I've got Scott Rerucha from Legacy Group Capital. He is the CEO and founder of Legacy Group Capital. It's based out of Bellevue, Washington. Really excited to join forces with you and share what you're doing. It's really special in the market. I've been very excited to learn and grow with you. Got a lot of unique programs and loan products to do things that are very outside the box. It's one of the most exciting things about my business is, rolling up your sleeves and getting dirty and trying to get creative to move some of these homes that wouldn't otherwise sell because of the situations that home buyers might be in or sellers might be in. Maybe the collateral itself is different, but I'm gonna let you tell us what it is that you do and why that you do it. So, for starters, Scott, why don't you tell me when did Legacy Group get started? Why did it get started? Tell me a little about your background.
Sure. So my background, and again, Jeff, thanks a lot for having me here. We're always interested in getting our message out and trying to help other people grow and build their business, just like our relationship and helping your business grow as well, too. A lot of people have found that we're a great asset to have alongside them when they're doing things. In today's world, we've had a lot of economic changes. The markets have changed. The interest rates are going up. Everybody's got to get creative in what they're doing. And so that's really what our platform is all about. My background, I've been in lending and banking and every facet of the lending business you can think of, all the way from private lending, hard money lending, to banking and mortgage lending. And so we've done all of that. And one of the things that I will tell you that's really, really powerful is that creating a lending platform that has true portfolio money where you can make decisions on loans, kind of like banks did over 50 years ago. We don't, now everybody's got to fit in 20 boxes and, to make a deal work. And there needs to be 30 days to close a deal because it's got to, got all kinds of compliance and all sorts of things. The cool part about what I call private lending, which is what Legacy Group Capital is, the cool part about it is we get to make our own rules. And so, we make good loans and we have a track record. We started this back in 2006. We've never foreclosed on one property in that entire time. And we have no non-performing loans in our portfolio right now of $275 million worth of loans in our portfolio today. And it's not because we're lending to bad clients and people that don't have credit or don't make money. We make good loans to good people that sometimes just don't fit in the boxes. And so that's kind of really what we're here to talk about. I think what some of your folks today will hear is a unique platform that they've never heard of before, because you won't find another one in the areas that we exist in. We're the only ones. And, we're happy to be teamed up with folks like yourself. We've created a few strategic relationships so that we can get out to more people and really help them, acquire real estate, get loans, and build their business. So we'll do two things here today. One is I'm going to share with you who Legacy Group Capital is and what we do. But more importantly, and second, I'm going to share what it really means to all the folks out there, to them and their business. But in order to do that, they really need to understand what we do. And what I'm about to show is something, like I said, that is not duplicated out there. There's nobody that has the unique platform that we do. And I think that, people will realize that as we're running through it. But it is a powerful tool that everybody needs to leverage off of and help grow their business in these times where things are changing, because there are new things. And, Jeff, you and I have talked about deals that we've done. And if I sat down every now and then, we'll do a seminar to some real estate agents. And when we walk through deals that we've done, usually the first thing, you see somebody like, oh my God, I had one of those last month, or I had no idea somebody could, lend on a house that had a ripped apart kitchen and didn't have a kitchen in the home at the time, those kinds of things. And so anyways, I think it's great information. So I will go ahead and I'm going to share my screen and I'm going to walk everybody through the first piece of really what we have here. And so I'm thinking, Jeff, you can see the screen right now. Is that correct?
Absolutely.
Okay. So I think where I'll start here is I kind of start on the left-hand side and I talk about Legacy and who we are from an investment standpoint. And then it rolls over kind of into the lending side of things as well, too. So we have an investment platform, and I keep this really simple. What we do is we have investors that give us money, and we have some parameters of what we can do with that money. But imagine you have this big bucket of money, and the money comes in, and it's housed in a real estate fund, and we're paying people interest on that money. So it's an investment that we've run for over 15 years now. And what happens is people give us money. We do one of two things with the money. We can either turn around and lend the money out. That's number one that we do with it. And that's a big portion. That's probably 75% of all the funds that come into Legacy are turned around and lent out. And then the other piece is we turn around and we can acquire real estate and actually buy real estate, develop it for a profit, sell off the real estate. And that all resides within a fund. And all those profits from the real estate acquisition activity and the lending activity go to our investors. And so we Legacy gets paid to manage these funds and run the funds, but we're sharing in all that with the investors. So from an investment side of point of view, we have 1,000 local investors that invest, over $270 million with us. And really why they've done that is because they want to be involved in the real estate market. They don't want to manage property. They don't want to sign on real estate debt, but they want to participate in this ever-growing market in the Pacific Northwest, which is really where we specialize at. And so this is a vehicle to do that. And, just to give your audience an idea, over the past 15 years, our average return on annualized has been 12% on our funds over the entire lifetime of our existence, with zero investor losses. And like I said, never foreclosed on a property. So we have this investment platform. People give us money, and that's where we get the money to work with out there in the lending world. And what's cool about that is we tell the private folks that give us money what we're going to do with it. They don't tell us what we can do with it. And that's a lot different than the banking world, which is, banks have money, but they're instructed by the FDIC and the government and the Department of Financial Institutions of how banks can function and what they can lend and how they can do things. And they're all to this big criteria. It's totally different here. So in that investment platform, we have a couple of funds that we run. These two boxes over there, one's called the Legacy Opportunity Fund and one's called the Northwest Fund. Those are just two different kinds of real estate funds that exist. I won't go into the dynamics of how those are, but they're a little bit different in how they operate, what kind of loans go in them. But they're two investment vehicles that people put their money in and invest in and get money out. The other part in our investment platform that we do is we do real estate syndication deals. And so I told you that the funds can actually own a real estate deal, and we'll develop it in there, and we'll hire a builder for a fee to build one out, and then we sell it and share profits with our investors. So when we fill the fund up and we have enough real estate deals, because the fund's limited as how much it could take, we source a lot of real estate transactions here, which you'll find out later in this model. But when we have them and the fund is full, what we do is we go out to a group of our investors and we do a one-off syndicated real estate deal where we just go and take down a property. We put a bunch of people into an LLC together. We hire a builder to build it. We sell it off, and everybody gets profits pari passu on the deal. And that has been, to give you an idea, we've done probably over the past 4 or 5 years, we've probably done, 40 or 50 of those. The returns are extremely high, typically on those deals where people are making, 25% or more annualized on their money per year that they drop into those. And so, as you can imagine, those are real popular with our investor base. And so that's another thing that we offer. Part of the reason people invest a lot of money with us is because they want to ride alongside of us in some of these real estate deals as well. So that's kind of our investment platform. We have this last box that says private mezz. I'm going to come back to that box because that's a little bit further down here in the layout. So I want to move to what we call capital loans, which is really, I'm referring to our lending platform and how we make loans. So we have a number of different types of loans, but think of us as a shorter term lender to meet a goal for a longer term requirement. And so what we do on that side is we do rehab loans, construction loans, and bridge loans. And 15 years ago, that was all we had in our platform. And that's what we started off doing. And so, first of all, the rehab loan, that is simply your loan, whether it's a person that wants to buy a house and fix it up and go live in it, but the house does not meet, lendable guidelines right now, we have these rehab loans. We also make rehab loans to builders and real estate investors that want to come in, and they're more for fix and flip type of stuff. So rehab can be owner occupied or non-owner occupied type of loans. Same is true for construction loans. So right now we do a lot of ground up construction loans for guys that are building high-end homes in the, greater Seattle area. We do quite a few in that neck of the woods. And this is for the type of person that really doesn't want to have to deal with bank financing and everything a bank will put you through to do a construction loan. If anybody in any of your audience has been through the process to go get a construction loan on an owner occupied property through a bank in the last year to 2 years, it's not very fun. You'd probably rather go to the dentist and get a root canal. And I'm proof. I'm building a house right now. I borrowed my money from Legacy because I could not go through what a bank was going to put me through to try to get a construction loan and all the documentation that they need. I could start 3 months quicker using private money. And sure, the rate's a little bit higher, but in the long term, it's going to save me a lot of money because I have flexibility and I have speed.
Yep.
So we do a lot of construction lending. That's not just for owner occupied. That's also for builders. So we have about 70 local builders that build houses, throughout. Right now, our platform is really over Washington, Oregon, and Idaho. And so we have a number of builders that build in those markets and in those states. And so we lend them a lot of money on spec construction type of stuff as well, which will be a part of the conversation as we move forward. And then moving to bridge financing. So we call bridge is just an interim loan for someone to acquire a piece of property quick for another purpose. And maybe it's somebody, hey, I'm going to buy a house and I'm going to tear it down and I'm going to build my dream home on this lot. And they need an acquisition loan to buy it and they need it quick because they're going to roll that into a construction loan. A bridge loan could also be somebody, hey, I just have my house, but we found a new house that we want to buy. I haven't even listed mine yet. So I want to leverage both properties against each other and buy my house. I'm going to turn around and sell the first one. And then when I receive that money, I will pay down the bridge loan and get a long-term mortgage on that deal. So a typical owner-occupied bridge loan. In that bucket, I would also say acquisition for like a builder. So a builder finds a property and, he's going to tear a house down. He's got to buy it. It takes him 9 months to get it permitted. He's going to build 4 townhomes on that lot. And so he needs a 9-month loan so that he can acquire the property before he goes and tears the house down and starts building out his 4-unit project with a construction loan. So we do acquisition lending as well too. And so a big part of our business, probably 50% of our lending platform is to builders for these kind of spec type of transactions. And so we've always been a big construction lender. So we're very, very involved in the builder world, which for agents, they should find this interesting because I'm going to teach you in a minute how you can leverage our platform to gain access to builders, which is really, really huge. One of the things that we do with builders when we're making loans to them is sometimes builders have a project going on and they haven't sold out of it yet, but they have a new project that they need to get started on. And as most of you know, when builders sell out of projects, they get all their money at the very end. That's when they pay off their loans and they get all their profit from the deal. So if they're selling, say, a 4-unit project and they've sold 2 of them, but they're waiting for 2 to sell, they probably haven't got any of the profitability yet. They've been paying down loans from the first few sales. And at the end, they get all their money. But now imagine a builder has to start a new project, but he hasn't sold out of one. So sometimes they need additional capital. And so Legacy Group Capital provides what we call a mezz loan. It's a second mortgage on top of their construction loan as part of the equity into a deal to basically partner with them on a deal. And today, Jeff, to give you an example, we have probably about 40 of those going on right now where we've actually participated in deals with builders by providing part of their down payment because they maybe didn't have enough of their own money at the time because they haven't sold out of other projects in order to move forward. Because one thing, if you talk to builders, they never want to sit around and have a project idle or not started. They want to go because time is money to them. So we really participate with the builders a lot there. And then the last box we have down there is a cash to close deal that we came out because, we get into these hot markets, and a lot of times if you find a great deal, one of the ways that you can win the deal is if I have an all cash offer instead of, I have financing, or even if I'm qualified and I have a pre-approval letter. An all cash deal means that, I can close on this all cash. Legacy has a cash to close product that we market that is flexible, easy, and quick. And it's different. There are a few products out there like that, but ours is different. And, we're more than happy to go in depth with, other agents about this down the road if they, so need that product. But we have a couple of really unique, amazing stories about what we've done on that to get people homes that they would have never had otherwise through any other platform that's out there. So that's our lending platform. And we could talk for hours about the different kinds of loans that we've done in these buckets. But one of the coolest things, and a lot of agents don't know this, is that 1 out of 3 real estate transactions in the United States of America are closed through a private lender. So 33% of all the deals done are closed through a private lender. That's just a fact. And so if you're a real estate agent out there that's looking to grow and build your business, and I ask you the question, how many deals in the last year or 2 years have you closed through a private lender? And a lot of times I hear answers like, well, 0, or maybe 1 because this deal fell into that. What it tells me is you're missing a whole piece of the market that you don't understand that you need to understand, because you're missing almost 30% of the business, okay? And so it's super important for you to understand about a lending platform like this and what can be done, because there's incredible deals that could be put together that people just don't realize that they could be done. And so, again, I would advise any of you to go a little bit deeper for the folks that really want to grow and build their business. So we have this unique lending platform, and, probably our reputation of being in this business for over 15 years is so good. And the reason it's so good is because, and Jeff, part of the reason you and I are doing business is because you've looked into this and you know this, but basically we do what we say we're going to do. And in the lending world, that's a tough thing to find, because how many people have had transactions where, yes, we're going to do this. Yes, we're okay. Yes, yes, yes. Oh, no, we can't do it. Right. And so that's not how we operate. We look at deals up front, and we're really making the decision from day one. Are we going to do this deal or not? And then we backfill all the other information. And sure, if you deliver us information that's completely different than what you told us up front, that's one thing. But typically we know the questions to ask, and we know if we like a deal or not. And so it's refreshing to know, even if you have a situation where you might have a tough property, and, that's where it might not meet conventional guidelines. And we're going to look at that up front and go, yeah, we're okay with the property. That means we're okay with the property. And we're not going to have a problem with that, moving forward. And so it's a piece that agents really need to start understanding, because let's face it, I learned this, I've been in this business 30 years, and, I've been in the lending business, and I know one thing: the more you can become an expert about your business, the better you will do. And if you're not an expert in your business, you need to be. And if you're missing 30% of the business, it means you're not an expert, because you don't know these pieces. So that's where we go on the lending piece. And then we have what Legacy has a real estate team here. And when I say a real estate team, they're a real estate acquisition team. So we typically acquire between 100 to 200 properties per year here at Legacy. And what we do with those properties is, when we acquire them, is we find these are all developable real estate type of properties. So, we're buying a single family home. It's going to get torn down. We're going to build a 5-unit townhome project, or we're going to build 7 row houses, or we're going to buy a property. We're going to fix it up and turn it into something else. So they're investment plays. And so think of this: Legacy is going to buy 100 to 200 properties. Some of those properties are going to go into our real estate fund. So the fund will actually own it. So the cool part about that is, when Legacy buys a property, we just pay cash, and we come in, and usually we don't even have inspections or anything, because we already know what we want and what we're going to do with the property. And so it's a quick all cash type of close with a very strong borrower that has a ton of capital. So we're acquiring properties. It goes into a fund. We hire a builder for a fee to go build out whatever we want. We sell it off for profit, and we share it all with the investors. That's option number 1. Option number 2 is, the funds full up, which happens a lot because it can only take so many deals. And more likely, we're going to go take that deal, and we've tied that deal up, but we're going to assign it to a builder. So a builder is going to actually purchase the deal. We'll assign it over to them for a small fee. We will have done all the due diligence work on it. So when we sit down with the builder, we will have a site plan, we will have a pro forma, we will have comps that come from the agent that brought it to us. These are comps on the way out. If we build something, this is, what we're going to sell off at, and we'll deliver it to a builder and we'll say, here's a project. We will lend you the money to acquire it, the acquisition loan. We will give you a construction loan to build it. If you need a little extra capital as a business partner, we will participate in that deal with you. But if you build it for this dollar, we have a pro forma. If you build it for this dollar amount and you build it on time, here's how much money you will make. And we're delivering them a fully baked pro forma, a fully baked site plan. Our team has already gone in, they've checked the zoning, they've put together the site plan, they know if there's an exceptional tree, they know where utilities are, they know everything that can and can't be done. So we're taking a lot of the work away from the builders. So builders sit down with us all the time and go, wow, so if I build this, I can make 350 grand. That's the deal. That's the deal. And we're going to lend you the money. So you can see, we get out of that deal, we get an acquisition loan, we get a construction loan, and then there's actually a mortgage loan that's done at the end for, end users that are buying these things out. And so we're really involved in the entire lending loop throughout that whole thing. And, part of that is why we have strategic partners, guys like you, Jeff, who can handle all the permanent takeout financing for us at the end of everything that we do. The last box that I want to talk about here is the syndication deals. So legacy, like I told you, if we don't assign a deal to a builder, if we don't put it into our fund, we do one-off real estate acquisitions where we bring in investors and we just take the deal down off to the side and we share it. And so we have a team of 10 people on our real estate team, and these are people that have worked on the permitting desks for years, and they understand city code and zoning and what developers have done and what you can do and what you can't do. And so they're a very talented team of people. And so when an agent brings us a deal, a lot of times the agent doesn't know, well, I'm not sure what you can do with this deal. Maybe you can build 3 townhomes there. Maybe you have a single family home and you can put an ADU and a DADU behind it. There's all these different things. Our team knows all the zoning and all the code, and they've studied it. And so we know the best and highest use for a property. So a lot of times real estate agents will bring us a deal and they'll be like, what can be done with this deal? And then we'll tell them, and we'll go back and negotiate with the seller. Hey, Legacy Capital, this is a property we'd like to own, and they're an all cash buyer, and they'll close in 5 days if you want, or if you want to live in the house for 7 months while they're permitting it, you can live there for 7 months. They're totally open to that. Or you can close in 7 months, whatever you'd like to do. But we're obviously a very strong buyer for those kind of properties. So our real estate team, the expertise level of these 10 individuals that work for us is incredible. And agents, some of the top agents in the state have learned that. So they bring us most of their developable type of deals. And of course, we have agreements with agents that meet our criteria because we have to approve agents that bring us actually real estate stuff, because we want agents bringing us the kind of stuff that we actually work through. But of course, when agents bring us stuff, we always have list back agreements with all the agents. So they're getting list backs on anything they build. So they bring us, grandma's house that we're going to buy, that a builder is going to tear down, and he's going to build 6 units, townhomes on it. We're going to have an agreement with the agent that brought us that deal that they get to list those units back. And so it's it can be a pretty robust tool to help somebody grow and build their business. So we're experts in that. And the last piece, we have a little piece, I always share this with people because it's interesting. It's called shared services. And what it's really around our builders, because we do a lot of builder business. So one of the things that we do to keep track of all the deals and the builders is we provide accounting services on their projects for them. So we run their books on any project they come through. And the good news for them is they get their bookkeeping done for a very cheap price with people that know what they're doing. And the benefit for us is we get to know where they're at on the project at all times, so that if anybody's ever getting into trouble or needs help or needs better subs because they're not getting good bids, we help with all that stuff to help ensure people are successful at the end of the day. So this is our platform. So as you can see, it's a lot more than lending. It's also getting involved with builders. It's also partnering on deals. It's also working with investors. And so it's pretty vast. And so, usually when I share that with people, if we have, builders that come in and sit down with us and to learn about our platform, one of the things, Jeff, that I find is really funny is that when we sit down with a new builder that's never heard of us before, and he walks in and we say, yeah, we can find you your next deal. We can do your acquisition loan for you. We can do your construction loan for you. And if you need extra capital, we can partner with you on that deal. And oh, by the way, we'll permit the property for you, because one thing I had mentioned is our 10-team real estate team, when we assign a deal, the builder doesn't even permit the property. We run the set of permits for them through the city and we get it permitted. We have 100 of those in process right now that we're working. And so we tell the builder, we can permit the property for you, and then we'll do your books for you at the end of the day too. And they're like, wow, I had no idea. And so there's very few builders that are not interested in doing business with us. So that's kind of our platform in a nutshell. And so, I don't know, if you wanted, Jeff, if you had any follow-up questions with that, or, if we wanted to, yeah.
Yeah, I mean, not my first rodeo. I've been through this several times with you and I have a firm grip on it, but there's so much to this. Just looking at the image, like the scope of work, the body of work, what you guys are able to do, it's really just endless opportunity. And I just encourage anybody that's taken the time to watch this video, reach out to me and let's talk further. Let's do a deeper dive into it. I can put you in touch with Scott or people on his team and really, uncover what can be done in your local market to really move the needle, close additional business, put more money in your pocket. It's a win-win for everybody. I mean, on the real estate agent side of things, what more do you do to equip them to go out in the marketplace and sort of evangelize the story for you? How can they have the tools in their tool belt as they're out pounding the pavement in their local markets?
Yeah, no, it's a great question. And so what I'm going to do now is I want to share one more thing on my screen here with you. And then we're going to talk about really what kind of value can we bring to the agent out there on the street, and and they can all determine for themselves how valuable this really is. But I'm going to walk you through how agents are winning with what we do here. And so hopefully now you can see a different screen there. Is that correct, Jeff?
Yep.
Okay.
I see it.
And so really, when we talk with some of the agents that we do business with, that roll through us, and again, it all comes through a funnel. I want to keep that emphasized because we've chosen a few select individuals that run great businesses like yourself, Jeff, to work through. So that business flows through you to us on the lending side. And the reason we need that is because 75% of the deals that come to Legacy are going to need an end loan at the end of the day to get this person out of the Legacy loan into a really good long-term mortgage. And that's Jeff's job. And we will only work with people that we trust, because our success is getting people paid off and out of Legacy and moving forward. And so we want the real professionals that know how to do it right, involved with us. And so that's why, it's very limited. You won't be able to go find this just out there on the street. That's for sure. But to the thing, so we talk about two things. One, ways we can help is just increasing your income directly based on our lending side. And that's the first thing I touch on. Between the two main points, one is, we're going to help you make more money. The other is we can really help you build your network. I think building the network is actually more valuable than the extra dollars we're going to make you on just one-off, real estate deals, but they're both worth talking about at this point. So first of all, I'm going to start again to the left-hand side of that diagram, which is portfolio lending. And, we've talked a little bit about this already, but we have the portfolio loans that are just going to help you close more deals. Okay. And again, that's going to be around bridge loans, rehab loans. Those are probably the two biggies that, we can find ways to make deals work that don't work otherwise. And I'm going to give you, we don't have time to go on all the deals, but just to give you a quick example of something that we came across recently is we had a couple that wanted a bridge loan. They were a young couple. They owned a house for like 3 or 4 years. Now they found their dream house. They want to sell this one, but they got to make an offer on this one right away. So they went to a couple people to try to get a bridge loan. The problem is that, they felt like they had a ton of equity in their existing home. But of course, when, the lenders looked at it, they're like, well, you don't have as much equity as you think. There wasn't enough equity in that to make this bridge loan all come together because the loan to values were just too high. And so they came to us, is there any way you guys at Legacy can help us? And so we sat down and we were talking with them, and it was a younger couple, and they brought their grandmother in. And the reason they brought their grandmother in with her is grandma has some extra money and she was willing to maybe put up some extra dollars to help them make this deal work. So we were talking to her along with this younger couple. And as we were talking to grandma, she mentioned, that she had an extra, $50,000 that she'd be willing to throw in the pot with them to help make this deal work. And that really wasn't going to move the needle enough on this particular loan because it was short of equity. But grandma happened to have a house that was worth $850,000 that she didn't owe any money on. And so one of the things that grandma said, and we asked her, well, would you be willing to put up your collateral for the next 60 days while these guys buy this house before theirs is sold? Because that would give us enough collateral. And grandma said, well, for sure, I would do it. And so long as, they're going to sell their house and then, and then they'll pay you back once their house is sold. And then we'll release her house back to her and it won't be collateralized anymore. But basically, we needed her collateral for 60 days. And we made sure that grandma understood what we were doing and that, there is a little bit of risk to this. The risk is if they don't sell their house, like what happens? But, they said, we'll just drop the price until we do sell it. And these were well-qualified borrowers as well. And so anyways, we did a bridge loan, and we collateralized not just the house that the borrowers lived in and the new one they're buying. We did a third one where we brought grandma's house in. And so we have 3 houses collateralized. Now, if you go to your local bank and you ask them to collateralize grandma's house on a bridge loan for some people, they're going to look at you like, what planet did you come from? Because that's not something that even can be done. And so, for Legacy, we made a loan, and if you put all this property together, our loan to value on the whole thing was like 55%. It's a great loan for us. And we're getting them a house they wouldn't have otherwise. And so this is just one example, again, of 1,000 that we could go over different kinds of scenarios where, we have ways to close deals. We have people that invest money into our funds, and they go out and they collateralize the money that's in the fund against a real estate deal to buy it and never even move the money outside of our funds that are earning them 10% interest. But that's a way that we've actually lent people is we use their collateral in a fund to go buy stuff. So there's a lot of ways, and, we won't make a deal that's bad. And remember what I told you earlier on, we have a record of, we've never foreclosed on one person. And the reason we haven't is because we look at what is the exit strategy of this deal to make sure. We do not want grandma getting stuck signing on a loan that she can't get out of. Trust me on that one. And so we're smart about it. So I think we represent our client base really well. So you can just close more deals. Okay. The other thing is, we're a buyer of real estate at Legacy. We're going to buy 100 to 200 properties in this next year. And so if any agent hears that, they go, wow, I've got a buyer that has like $275 million of cash that's going to buy 100 to 200 deals in the next year. And it's somebody that I can have a relationship with. How do I make that relationship, right? And so, this is an avenue for you to get connected up through us and where you can sell properties to Legacy Group Capital. And so you just have to understand, the criteria and what that's all about, how that works. But there's extra dollars there. And then, the builder business side is the other side. So, builders can be referred to us and come in, and builders love us. Every time we sit down with a builder, they want to do business with us because most builders don't know anybody that's going to lend money to them and find them deals at the same time. So that's just a great relationship that if you introduce a builder that you're working with on a project to Legacy, obviously that just ensures more listbacks for you because you're bringing value to that builder. And so these are ways for you to make money on deals that you might not make otherwise, right? And, even if you don't have a builder, because I hear a lot of agents always tell me, God, I'd love to have a few good builders, right? Well, I'm telling you, 70% of the builders that are out there right now don't even know about Legacy Group Capital and how they might have heard of us, but they don't know how it all really works. And so introductions like that, lead to listbacks and lead to relationships. And so that's how you can just build your income. You can start doing builder business, you can close more deals, and you can potentially bring, optimal properties to Legacy Group Capital. Now, the really powerful tool, Jeff, is on the building of your network. And so, it's funny, I grew up in the mortgage business. And so a lot of the agents are going to relate to this, but, being in the mortgage business, we were always told, go out and find a couple good real estate agents that'll refer deals to you. So me and all my mortgage buddies and everybody I was with, we went out and we called on agents and we would cold call you and we'd go to open houses and brokers opens and we'd sit down and kind of tell you how great we are and that we'll return your phone call right away and that your other guy probably won't. And, we have a good interest rate and all that stuff, which agents really aren't really interested in hearing because they hear it all the time, right? And it was so hard to get relationships with agents because they had all these people pinging them all the time. And then every now and then you'd finally get to an agent through a friend and you're going to take them out to a nice lunch and you're going to buy them a steak sandwich and they agree to come. And so we all know what that's about. So, you sit down with the agent, you kind of, what I say is, you get like 45 minutes to kind of vomit on them and tell them how great you are. And their side of the deal is they get a free steak sandwich out of it. And then as the meeting ends, they tell you, hey, it was really nice meeting you. Maybe I'll send my next deal to you. We all know that they won't, but they say that. And then we all leave. And, that's how we go about our business. And it doesn't work, right? And the reason is because we're all bringing the same thing to the table. And by the way, the real estate agent, if they're any good, they already have a mortgage guy. They already have a guy they're doing business with that's probably good, right? And if they don't, there's probably a reason why they don't. And so my point is it just doesn't work. But now think about this. If you have actual value that you can bring to somebody and sit down and have a meeting. So I hear real estate agents say the same thing. They call on builders. And they tell builders, I got a great listing package and I know the market better than anybody. And you should see my brochures that I send out and everything. So builders don't care about any of that really. I mean, they do in one instance, but that's not what gets you the business, right? You need to build a relationship. The only way you're going to do it is by bringing value to them. And I'm going to tell you right now, with the avenue we're talking about today, if you bring a builder into the halls here at Legacy Group Capital and they sit down, they will take note of where they've been brought and by who. And it's a great, if you allow, both myself and Jeff to help train you on our platform, you can actually go out and market to builders and you will get their attention because you won't be the other guy telling them you have the better glossy brochure over everybody else, or, you're going to cut your commission on the listbacks on their deals or whatever it is you need to do, because you don't need to do that. And so anyways, so for me, it's building your network. And so one way you do that is with builders, because it's hard for agents to get to builders, and this is a way to do it. The other way is real estate investors. I mean, again, we have this really unique, flexible platform that real estate investors love this stuff because they have flexibility on how they can buy stuff and what they can close and how fast they can do it. So you bring an investor through our piece too. That's a great way. Even if it's a guy, he's buying a non-owner occupied property and he's going to end up renting it out. We're going to do a short-term loan to let him acquire it. Jeff's going to do a loan to get him long-term financing so he has a great property at the end. And we work as a team that way. And it'll be smooth. And we're in communication. So the whole thing is like seamless to an investor rather than bouncing around to a bunch of different people and trying to make something work. So this is just a piece, again, that makes your business really professional. And the last piece is homeowners. So, we do owner-occupied lending here. And what I would challenge every real estate agent to do is, a lot of them have talked to a private lender or hard money lender about possible deals, but a lot of them have somebody maybe they throw something to because they have a guy who has bad credit or couldn't qualify for a loan. So a lot of them have, an option to go out there. But here's the deal. Go out and find me one private lender in the state of Washington, Oregon, or Idaho that can do an owner-occupied loan. So somebody that needs an owner-occupied bridge loan, a rehab loan, I want to fix the house up and then I want to live there. You won't find it because it doesn't exist. Legacy Group Capital is the only person that does it. And the reason we're the only person that does it is because we have our consumer lending license. So that means we can lend to a consumer. No other private lenders do because they don't want all the compliance and regulation that goes around having to lend to a consumer. As you know, Jeff, is very difficult because you have all sorts of regulation and all sorts of disclosure. When you're lending to, for what we call business purpose, to a builder or real estate investor, it's interesting because the government doesn't really care how you lend to them or what you do or what they pay. They don't really care if you're an investor or a builder because you're doing it for profit. They say you should be watching out for yourself. But if it's a consumer, oh my God, you've got 50 guidelines to follow. We've done this because we've run mortgage companies. I've run banks. I've lived in the consumer lending life so why not do it on the private lending side? Because we have more Microsoft and Amazon and Google guys that are borrowing money from us right now because, they're buying a house in Medina, Washington for $5 million and they need to close on it in 10 days and they can't do that through a regular bank. And so they come to us and these are paper clients that, have tons of money, but, they need flexibility. So this is what our platform's all about. And we're really good at it. And we have a really good reputation. And we're very selective about who we do business with. There's very few lenders, folks like yourself, Jeff, that we'll do business with. It's extremely limited to just a few. And then even on the real estate agent side, we ask if we're going to do business with any agents that, we set up a class and that class is through Jeff because he can set up a class and we come in and we teach what we call the private lending class. And it goes way deeper than what I just explained, but it gives you the ins and outs. So we educate people. And then if they're our type and our platform's good for them, then we form a relationship and we kind of approve them on our platform and we go down the road. And so that's really how it works. And, I compliment you, Jeff, for, putting something like this together where you can bring a message out to your folks and be mindful of where they're going to need to be heading in this next year or two in ever-changing market times. And, I'll be the first one to tell you that, when interest rates go up, we do a ton more volume because the banks tighten up, real estate markets slow down. It's harder to get deals done, but we all still have to get deals done. And so we're the avenue for that. And that's when our business really ramps up. And so it's just something that people really need to be considering. And I would advise them to take the next step, which would be to put a call into you and participate in one of the seminars, the many seminars that we'll do together to bring, certain folks into the loop that this avenue is going to really help.
Yeah, no, it's just an incredibly powerful relationship, platform, a lot of unique opportunities, a lot of unique lending products. I've always been excited to talk through the product suite with you, but I want to get more exposure to the outside world. Let's not keep this a secret. That's really what this video was all about, is trying to evangelize the uniqueness and the message that you have to share, and just trying to track some like-minded individuals, professionals that want to build their business, want to think outside the box, want to bring value. It's all about leading with value and doing something different than your competitors. And then, we teach, coach, and advise. So let's do these classes. Let's do a deeper dive. I have some pamphlets that I can provide as a stepping stone, and that will just give you a little bit more information into what Legacy Group Capital is all about. And then from there, we can try and get something on the calendar for a formal class. But it's just, there's so much that can be done with this. I didn't know that stat about 33% of all real estate deals are done with a private lending source. That in and of itself, I'm a math person, I'm a finance person, I'm a statistics person, and that probability, a third of all business is being done, that's a big piece of the pie. and you're missing out. Like, you can be a part of this. You just got to come in and get educated and learn about this stuff. But I personally think it makes the job more exciting. The more we can be involved in the outside the box creative lending and the creative real estate transactions, that is what really fuels me. I'm passionate about that. It's it's not one size fits all, and it's as close to relationship banking, relationship lending as you can get. Yes, there's still regulation. Yes, there are still check boxes, but it's not nearly as detailed. It's not nearly as minute as, agency, Fannie, Freddie, FHA, VA. It's not like that. So it's so much fun. And I want to encourage everybody to reach out. Let's talk some more about this.
Yeah, I think it's great. And again, back to your, 33% of the business that comes through this platform, we get agents sometimes hear this and they get kind of amped up. But what's really interesting to me is it's back to the 80-20 rule. Only about 20% of the agents that are out there will ever get serious enough to go really look into it enough to make it a part of their business, right? And that's what you're really bringing. And one of the reasons that you and I mesh and that we do business together is we're here to bring value to other people. I'm smart enough to know here at Legacy that if I can help educate and train people and make them a better expert in their business, it's just going to be more business for me too, right? Yep. So sure, there's greedy purposes, but really I'm here to help other people. And Jeff, I know you are too, because I know that's how you do your business. And we can all be strategic together and grow a business together. But you got to be willing to take those next steps. And if you're not, I would ask yourself, what am I doing in this business? Because, I want to be the best that I can be. And that's not by leaving 30% of the business off. Yeah.
And I want to just point out, if this is the first time, if this is your real first experience being exposed to private lending, you've heard a little bit of Scott's story and Legacy Group Capital's story, and we have brought this to you today. I hope that light bulb goes off that says, those are action takers. This is initiative. This is about blazing a trail. This is about being different and just keeping the market moving despite all the noise, all the media, all the sky is falling and real estate's going to crash and all this nonsense. Because we all know, just look back over the course of history in the United States in the real estate market. Interest rates up, interest rates down, prices up, prices down. There's still real estate happening. Transactions are still happening. And 33% of those are private lending. So I hope you have that aha moment that holy crap, I'm missing out. There's a whole nother enchilada over here and I want some of that. And let's make it happen. Continue the conversation, reach out, send me an email, call me on my cell phone, send me a text message, and let's further the conversation. And then maybe we set up one of these upcoming classes and we'll have Scott come in and teach on site at your office.
It's perfect. I totally agree. And I hope some take advantage of it. And it's been a pleasure again, being on this video with you here. And, I hope that we can reach out and help a lot of folks.
Thanks a lot, Scott. Appreciate your time. Can't wait to get together with you.
Awesome. Thanks a lot.
Bye-bye.